All right, thank you very much. Once again, welcome. My name is Steven Primo, and I am the president and founder of SpecialistTrading.com. Specialist Trading is a very unique website because we really just cater to teaching traders all of the specific insights, wisdom, and trading strategies that I learned from being on the floor. I was on the floor of the Pacific Stock Exchange. Just to give you a little bit of background about myself, I know we have a lot of members here that have come to my webinars in the past, but for those of you who are new, I have been actively trading most of the markets for the past 34 years. I began my trading career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of those years I was a specialist. I made markets in roughly about 50 stocks. I traded through the crash of 1987. I traded through a lot of different market environments, and I traded through the next great bull market that started right after that crash. And I continued to trade until ultimately I left the floor in the mid-90s to trade my own account. I was one of the very first traders to leave the floor and to actually trade my own account off the floor in my home office. Since then, I have managed money. I have continued to trade and to teach people. And most recently, in the last 3 to 5 years, I've gotten really heavily into teaching. I was asked to be the director of education for a number of sites, but roughly about 3 years ago, I started Specialist Trading, which really just focuses on the way I trade. And I just teach basically what I use personally. Now, I know a lot of you may be saying that are new, your background is in stocks. What we trade here is, the forex market. But all of my techniques, regardless of which ones I use, can easily be transferred over into the forex market. And most especially, I believe, into the forex market because, in my opinion, the forex markets are the best trending markets around, better than stocks, better than the E-minis, and they really trend tremendously, and that fits in right in with a lot of my methodologies and trading techniques. So what I want to do today is, what we're going to talk about today is teaching you my pattern recognition strategy. This is a great strategy. It's probably our most consistent strategy, one that I teach and trade personally myself. And it's usually reserved for the members of Specialist Trading, but I'm going to be teaching you the setup bars, in other words, how to spot a setup for this strategy, and the entry method so that you can actually begin using this as early as today if you'd like. Now, I recommend you paper trade for a while just so you can really understand this process. But there are actually, when I started this presentation, when I logged on here about 10 minutes ago, I checked out a few of the daily bars, and there were a couple of charts, a couple of foreign currencies that were actually showing signals in exactly what I'm going to be teaching you today. Okay, so today we're going to be talking about my pattern recognition strategy. But before we begin, as always, I'm required to remember that we can in no way guarantee that any of these results will be repeated in the future. So as you're taking a moment to view my disclaimer, I'd also like to mention that for those of you who have come to my presentations before, you'll know that I like to wait till the very end of the class to ask any questions. You can ask a lot of questions, pertaining to what I'm going to be teaching you today, but please wait till the end because it seems to help the presentation go a lot quicker. So if we wait till the end, you'll many times, if you have a question, you'll see that question answered within the next slide or two. So if you happen to have a question, just write it down. If we happen to run out of time, I don't believe we're going to, but if we run out of time, I'll also give you a contact number as well as an email address where you can write us your questions, okay? All right. Now, as I said, I'm going to be teaching you the strategy, which is probably one of our most consistent strategies, and it is really a great tool for trading the forex currencies in any direction in any time frame. But my goal is to teach you how to trade with the specialist edge. So it's not just enough to know how to enter into this strategy. There are many more things to learn. The edge is really about keeping things as simple as possible, but learning these methods and tips that I learned from the floor. Now, just because, I was a specialist on the floor does not mean that I was making hundreds of thousands or not millions of dollars a month. I mean, a lot of people have that preconceived idea that everyone was making a killing. There were many specialists that were, but I really struggled for my first 2 or 3 years not being able to make any money. I would, basically break even for the first 2 or 3 years because I do great for a couple of months and I give it all back. And I kept repeating the cycle over and over until a few specialists, these elite traders, taught me their edges and their secrets to success. And the secret is really about keeping things as simple as possible. Not about adding more and more things to your trading plan, but really about stripping things away. So this is really the edge, and this is really, I believe, the meaning of success, where once you have this edge, you'll have this consistency to your trading. I'm not going to sit here and promise you that once you have this edge, you'll become a millionaire within the end of the year, but you'll have this consistency, because success is really being able to trade 10, 20, 30 years down the road. Not so much about making a killing, because I know tons of traders who made killings and then lost everything. So we're not really concerned with that. We're more concerned about having this consistency in your trading. And I know many of you suffer with this. I did myself. And it's very, heartbreaking to know that you have 2 or 3 good months and then you give it all away, and then you think, well, boy, what was it all for? I don't have anything to show for all my hard work. So the goal here is to teach you how to trade with the specialist edge, and that edge is rooted in simplicity. Okay? So we're aiming for consistency through simplicity. Now, before we begin, I want to tell you what you're going to learn today. All right? As I stated, I'm going to give you this pattern recognition strategy, but remember, I can't give away all of the rules, because it wouldn't be fair to the members that actually are at Specialist Trading that purchase the course. But I'm going to tell you how to spot a setup. I'm going to give you all the rules, and then I'm going to show how to enter, the best way in which to enter this particular strategy. All right? Now, this strategy is designed to trade quick momentum moves. Even though you can stay in the trade using some of our advanced trade management, you can stay in the trade a lot longer if you'd like. It's really designed to be in the trade. If you're looking at daily bars, anywhere from 3 days to maybe 10 days. Or if you're looking at a 10-minute chart, maybe an hour, okay? Now, the great thing about this is that it works on any forex market. In other words, any cross-currency you care to look at, anything. And it works in any direction. And it works in any time frame, which I also did mention here as well. I'm going to show you some current chart examples. I'm going to show you some intraday chart examples. And I'm also going to show you some daily bar chart examples. So you'll see how easily it transfers over. So if you're someone who likes to trade multiple times during the day, this strategy is fine. If you're someone who likes to just take position trades and maybe trade once or twice a week, this strategy is also fine too. Okay? And then, as I stated, at the very end of the presentation, we're going to have a question and answer period where you can ask me any questions regarding the strategy. Now, I know a lot of you may be interested in actually purchasing this strategy, so right off the bat, I just want to tell you, FX Street, through their good graces, has created a microsite where you can get information on all of our products and anything about me at specialisttrading.com. So here's the link you want to go to, and I know that link is a little bit hard to copy, so we've created a smaller link right here. That's bit.ly/06mgvo. So if you just write that down or copy that down, this will take you to the microsite that FX Street has graciously prepared for us. And it will give you a lot more information about my product. So any questions regarding the product, you can actually go to this microsite. I'll just give you a little display here of what that site looks like. As you see, it gives you a little broader insight into the self-study strategies that we provide. You can click on this link for course descriptions, and it gives you a little bit more information about myself. Now, I'll also repeat that and give you the link once again at the end of the presentation. But anything you have concerning our products, you can go to this microsite that FX Street has provided for us. Okay? All right, so let's start with a strategy. Get out your pencils and paper. Once again, these are the rules. I'm going to first start off with the rules for entry for buying, and then I'm going to give you the rules for going short. This is a pattern recognition strategy. Once again, we're going to go over a lot of chart examples, so if it doesn't make sense right off the bat, don't worry. A lot of these charts may explain it as we go. And I'm going to begin showing you charts that may be a little bit older. I know I go to webinars myself, and I don't like when the presenter shows charts that are a year or two old. I'm going to be showing you older charts just in the beginning, just so that you can understand the concept. But then once you understand the concept, then I'm going to be showing you current charts of how the strategy actually works. Okay? So in the beginning, the charts may seem a little older or out of date. All right, so let's take it step by step. Once again, get out your pencils and paper so you can write this down. Remember, we're looking to go long now. Here's step number one, rule number one. Price must be above the 50-period simple moving average. If you've taken my presentations before, you know that we call the 50-period simple moving average our buy-sell line. This is the most important tool we have at Specialist Trading. We use this for virtually every strategy and actually in any market we're talking about, whether it's stocks or the E-minis. This is a very important tool. I want to make sure you understand this, because if price is above the 50-period simple moving average, then we're only going to be looking for long setups, okay? If price is below, we're only going to be looking for short setups. And this is a very extremely important method to use. Whether you decide to use this strategy I'm going to be teaching you today or not, I really feel that you should plot on every one of your charts, regardless if it's an intraday chart or a daily chart or a monthly chart, always have a 50-period simple moving average there. And only take longs if they're above, if price is above, and only take shorts if price is below. It's that simple. Remember I talked about the simplicity of specialist trading. But you'll see how you'll really get high probability trades if you're above the buy-sell line to go long or if you're going short below. I can almost guarantee that many of your losing trades are because you're out of sync. You're buying when price was below and you're selling when price is above. So it's much better to be in sync with the trend than to be against it. This is one of the important things that was taught to me on the floor. I was trying to pick tops and bottoms, and that would work great for a couple of months, and I'd give everything back because it didn't work on that last time. So we're not trying to pick tops and bottoms. We're trying to go with the flow. So in order to do that, if we're going long, price must be above the 50-period simple moving average. All right, so here's our example here, an older chart of the British pound, 10-minute chart. Okay, we're going to look at a couple of intraday time frames, but once again, this works in any time frame. So we see price here was kind of straddling the 50-period simple moving average, but now it's clearly above. All right, so this means we have perfect environment to look for long setups. That's step number one. Step number two, we're going to look to buy when a price bar closes in the top 25% of its range. Okay, we want to see a bar that closed in the top 25% of its range. This is called our setup bar. Now, does this mean that once we find this, we're just going to buy at the market? No, this is just a setup bar. It's getting us set up to go long. It doesn't mean that we're necessarily going to even have a trade. This is just a setup to go long, but we have to find a bar that closes in the top 25% of its range. All right, so once again, looking at that chart, we see that this bar right here actually closed at the very top of the range, but it closed in the top 25 as well. So this ultimately is going to be our setup bar, okay? Step number three. Now, once that we've defined and determined what the setup bar is, we will either the setup bar or the previous bar. In other words, the bar before the setup bar must be the lowest low of the last 5 bars. Okay, so this is where I know sometimes it gets confusing. So once you have found the setup bar, either that bar or the bar before it, the previous bar, must be the lowest low of the last 5 bars. Okay, so here's our setup bar again. Now let's count. Is this bar the lowest low of the last 5 bars? No, it's not. But is the previous bar the lowest low of the last 5 bars? Yes, it is. So this gives us a valid point to enter. This is the final rule in which we need in terms to have everything set up. This is the perfect environment to go long. Is it guaranteeing that the trade is going to be a winner? No, it doesn't, but we're putting the odds in our favor. Why? Because we're in sync with the trend, meaning we're above the buy-sell line, the 50-period simple moving average. We found the setup bar, a bar that closed in the top 25%, and then at the same time, either that bar or the bar before it was the lowest low of the last 5 bars. See, what we're looking for is some type of a pullback, some type of a, we have an uptrend in place, and we're looking for some type of a little sell-off before we resume. All right? All right, step number 4. All right, so now that we've found everything, the conditions are perfect. Now how do we get in? Well, we're going to enter to buy on the next bar only. All right, so we're not going to, sit around and just wait for an hour. On the next bar only, if the price trades 1 pip above the setup bar's high. So in other words, we have to see on the next bar that we trade higher than the setup bar's high. That's our point to enter. We can either have a buy stop in there or we can just jump in at the market. But it must be on the next bar, because if price does not trade 1 pip higher on the next bar, then the trade is negated. Then we're not even going to get involved. We're simply going to pass on this and look for another setup. Maybe a different time frame, maybe a different currency pair. It doesn't matter. Okay? So here's the next bar, and as you can see, we entered right above. Once we traded above, we entered into the trade. Okay? So this is our entry. This was the whole setup. This was the lowest low of the last 5 bars. We entered into the trade, and look what happened. We're not trying to pick a top or a bottom, even though it looks like we picked some type of a bottom here. What we were really doing was we were finding the trend, and then we were looking for a pullback within that trend. That's all we were doing. We were listening to the market. See, the market was telling us that once we were above the buy-sell line, we should only be looking to go long. It was also telling us that once we had closed in the top 25%, that it was getting ready to go back up. And it was also telling us that since it had made some type of a short-term low by being the lowest low of the last 5 bars, that we may have bottomed out on this little pullback. All right, so there's no need to listen to news, no need to worry about a report that's coming out, no need to be in a trading or chat room. The market is telling you everything you know that you need to know. It's that simple. You see, when you start adding these things onto your trading plan, that's where you get confused, and that's where you start second-guessing yourself, and that's where you start listening to what other people or other things are doing. And pretty soon you're doing what I was doing when I was on the floor. You've got too much information, and you're too confused, and it may work for a while, but ultimately you're going to just really shoot yourself in the foot. It's much easier to listen to the market, plus you'll save a lot more money listening to your market than spending your time and money on all these other things. And just listen to the market and practice this simple technique. Okay, so that was our first example, our setup for going long. Once again, we just looked at an intraday chart, an older British pound example. This can work looking at an hourly chart, a daily bar chart, a monthly, doesn't really matter. Now, let's look and see if we want to go short. Are the rules going to be any different if we want to actually short using the same strategy? Okay, so let's look at the same strategy, pattern recognition strategy, the entry rules for selling. All right, step by step. If we wanted to buy, if price was above the buy-sell line, well, obviously it stands to reason now things must be different. Now, if we want to go short, price must be below the 50 periods of the moving line, the moving average. Excuse me. All right, it's that simple. Remember, you're going to put the odds in your favor if you're in sync with the cross currency, the currency pair. Now, if you're buying and it's below the moving average, you're out of sync. And conversely, if you're selling and it's above the moving average, then you're out of sync. So we want to be sure that price is below the 50 periods of the moving average if we're looking to go short. So that's step one. Now we're looking here at 1,000 tick bar chart. See, I told you how easy it was to transfer this over into any time frame. Now we're looking at tick bars. I know a lot of traders, intraday traders, like to use tick bars. Here's 1,000 tick bar of the euro dollar, an older chart. And we can see here that price in the beginning is below the buy-sell line. Now here, it kind of traverses above here, so we're not looking at this. We're looking at this bar right here. We're below. We close below. So for all intents and purposes, we're below the buy-sell line. All right, step two. Now we're going to look to sell when a price bar closes in the bottom 25% of this range. Just before where we needed to go long with a price bar closing in the top 25, now we need to see it close in the bottom 25. If we see a bar close there, then this is a setup bar. Once again, we're just setting up a trade. We are not getting in yet. We still need some more requirements met. And as we can see, we closed at the bottom 25% here once again. So this qualifies as a valid setup bar. Even though the opening and the prior bar before were above this moving average, doesn't matter as long as the close is below the 50 periods of the moving average. That qualifies as being below. And we close in the bottom 25%. So we now have a setup bar. All right, step number three. Either this setup bar, which we just qualified, or the previous bar must be the highest high of the last 5 bars. Okay, just the opposite of what we were doing before when we were going long. Now we need to see either this bar or the bar before it to be the highest high of the last 5 bars. So we go back to the setup bar. Is it the highest high of the last 5 bars? Yes, it is. It is the highest. It had the highest high of the last 5 bars. So it perfectly qualifies as a valid setup bar. This means we are ready to enter. But how do we enter? All right, step number 4. We're going to enter to go short. We're going to enter to sell on the next bar only, regardless if it's a daily bar or a 1,000 tick bar or a 5-minute bar. It doesn't matter. But we're going to enter to sell if price trades 1 pip below the setup bar's low. So we found the setup bar. Price has to trade 1 pip below that low, and it must trade on the next bar, because if it does not trade 1 pip lower on the next bar, then we're going to negate the trade and we're going to look for another setup. So here's the setup bar. We open a little unchanged, go a little higher, and then trade below. So we would enter short right here. We entered short, 1,000 tick bar chart of the euro dollar, and then look what happened. Okay. Once again, we had a little minor rise, a little upward move, a little upward pullback within the euro dollar, and then the trend gave us clues that it was going back down again. See, we're in sync with the trend. We're not trying to pick a bottom. We're not trying to outsmart the euro dollar. We're just listening to what the euro dollar is telling us and then going with it. We're jumping on board. In this case, it was to the downside. All right, so we've looked at the concept. Let's look at some recent intraday examples, okay? I want to show you how this has really worked within the past week or even the last month or so when we're looking at daily bars. All right, here's a 15-minute bar chart of the Australian dollar. This was, I believe, about last week. Now, here's the buy-sell line. And specifically use this example to make this known where here's the 50-period simple moving average buy-sell line. Now, this is where my students have trouble. They'll say, but Steve, we're below the buy-sell line, so we should be looking to go short, right? Well, let's look at this last bar, though. Where did this last bar close? It closed above the buy-sell line. So since price closed above, we're not looking to go short. We're actually looking to go long, okay? So it's okay if intra-bar it went above but then closed below, then we would still be looking to go short. But since we closed above, we're looking to go short. Now, what's our next rule? We want to see if the bar closes in the top 25% of its range. And as you can see, it did close in the top 25%, so this is our setup bar right here. It's a valid setup bar if either the bar is the lowest low or the bar before it is the lowest low of the last 5 bars. Well, this bar isn't the lowest low, but the bar before it is. Okay? Now, so we are closing above the buy-sell line. We closed in the top 25%. The previous bar closed, or I should say the previous bar was the lowest low of the last 5 bars. So this is a valid setup bar. Now, one of the beautiful things we have about our methodology is that for TradeStation, this automatically signals you with a green dot when there is a valid signal. So even though this is hard work, I'm trying to teach this to you, it will automatically signal when there is a valid setup. But this does not mean that you just jump in and buy at the market. We still have to have our proprietary entry built. So where does the entry take place? It takes place right here. If we trade 1 pip above on the next bar, on the next 15-minute bar, then we can enter the trade. But let's say the next bar opens unchanged and then goes down. Well, the trade is negated. We're not going to even consider and wait for it to go back up. It's over. We're trying to catch this momentum. All right, so we see that it did go above, so we entered at 1.0512, entered into the trade based off of the valid setup bar. We got the green dot telling us it's okay, and then look what happened. In the next hour, we had a nice 80-pip move to the upside, okay? All because the setup was valid. And remember, we were above the buy-sell line. Let's look at another example here. This is the euro-yen. This was on the 29th. This was actually of the 29th of January, which was, I believe, Friday, going into the Monday's trading. But as you can see here, where is the euro-yen? On this hourly chart, the euro-yen is below the buy-sell line. So we're only looking to go short. All right? So we're looking for a bar that closed in the bottom 25% as it did right here. And it was validated by our red dot signaling that it is a valid signal to go short. But we never traded 1 pip lower than that level on the next bar. So there was no actual trade here. Even though we had a valid signal, we had a valid setup, we must trade 1 pip below. This is why we don't simply jump in at the market, because as you can see, look what happened. Had we just sold at the market once we got a verification, we would have had a losing trade and probably exited because we were too frightened of being in a losing trade, probably exited when we should have gotten back in short. So it's better just to wait for confirmation that we trade 1 pip below, minimum 1 pip below. So we didn't take any trade here, but guess what? We have another valid setup to go short here. We're below the 50-period simple moving average. We closed in the bottom 25%. This is the highest bar of the last 5 bars. We've got a red dot that totally gives us the qualification that this is a valid setup bar. So we'll go short on the next bar only, on the next hourly bar, if we traded below this setup bar. As you can see, we did. We entered at 101.33, and as you can see, in the next couple of days, we had over 100 pips, 125 pips. It went straight down. Now, here's a 1,000-tick bar chart of the British pound. Okay, now looking right here, had you not, understood the concept of what I've taught you so far today, you would have said, boy, looking back at this, how could I have taken advantage? Boy, this was a nice run-up on an intraday trade here. This was actually on the 25th, I believe, of last week. Someone looking back in hindsight would say, how come I can't get involved, when we have these really nice, upward or downward trends I wish there were a way to capture that. Well, once again, where is price in relation to the 50-period simple moving average, the buy-sell line? Price is above. So right off the bat, once we were above at this point, the market was telling you, the British pound was telling you, you should only be looking to go long. There's no reason you should be trying picking a top. There's no reason you should be trying to go against the grain. Just look for buy setups. And once you understand the concept of how to use this pattern recognition strategy, there were a number of setups, as you can see where the green dots are. These were all setups to go long. Now, I'm not saying that you would have entered on each one. On this trade, you could have entered and made a nice trade. But on this trade, you would have, because we never traded above the setup bar. But on this setup bar, with the green dot below, you would have had a nice trade. Okay? So this, just because it's a valid setup, once again, I want to make sure you understand, does not mean you're going to enter into the trade. It just means that you have the proper environment to go long. We just need to have confirmation that we trade if we're going long 1 pip above that setup bar. But as you can see, the software clearly defined where these setups were, and this is a perfect example of being in sync with the currency pair, not trying to pick tops and bottoms, and how when you keep things as simple as possible, that's really what I'm trying to instill and teach you, is that when you keep things simple, there's no need to clutter your trading with outside sources. All right, so let's look at some recent daily examples. Now, a lot of people will say, well, what's the best time frame? Is it just for intraday? This works on any time frame, any direction. And you're going to get more signals when you're trading intraday, but you'll still get some nice signals when you're trading daily bars as well. So here's some recent daily examples using the very same technique. Nothing is altered. We're not changing things because we're looking in a different time frame or a different direction. All right, here's the euro dollar at the beginning of December. Where was price in relation to the buy-sell line? Price was below, right? So there's no way possible that we should be thinking about buying the euro dollar. There's no way. It's as simple as that. There's no reason why to listen to any chat room. There's no reason why to worry about what some economic number is going to be. As long as we're below, you're only thinking about shorting. And if you don't want to short the euro dollar, then just don't trade it until it gets above the 50-period simple moving average. Okay? So now we're looking for a bar that closes in the bottom 25% of its range, and that's this bar right here. We close in the bottom 25% of its range. All right? And at the same time, it is the highest high of the last 5 bars. So what does this tell us? We have a valid setup to go short, as signified by a red dot here. So we can go short if we trade below this setup bar on the next daily bar. Remember, it has to be on the next bar. We're not going to sit around and wait for a couple of days, a week, or a month for it to go below the setup bar. If it doesn't happen on the next bar, the trade is negated. So this is where we're going to be going short. You can either put a sell stop in there if you'd like, or you can simply wait and follow. And if you're lucky enough to be in front of your computer for 24/7, you can simply sell at the market once we trade below there. And the next day, look what happened. Well, guess what? We never got there. So guess what? This is not a valid trade. We didn't take a trade here. This is not something that we are interested in trading. In other words, we're not going to sit around once again and wait. We're simply going to say, well, the trade's negated. All right? That's it. So what does this mean? Well, it means that we can still look at the euro dollar for trades. Now, guess what happened on this bar? We're still closing in the bottom 25%. And as you can see, the bar previous is the highest bar of the last 5 bars. So what this is telling us is that even though this was a setup, but it didn't work out, this is a setup bar as well. So we got a red dot here telling us that we can go short using this bar as our entry setup bar, but only if we trade below. Okay? So let's see what happened on the next bar. Well, there we did. We opened roughly unchanged, traded lower, which got us short at 33.73, and then closed up. That's okay, not to worry. We're trading this methodology that has stood the test of time. We're in sync with the trend. We're not, in any way feeling guaranteed that they're all going to be winners, but we know that we have the odds in our favor. So we stay short, even though on paper we have some type of a loss. All right? And then look what happened. In the next week and a half, the euro dollar went roughly down close to 400 pips in just about 6 days or so. Now, this was an actual signal that many of our members caught and traded on. And this was a great signal, and using the same techniques and using the same things that I taught you today. You could have taken this signal had you seen this, and this was in a little over a month or two ago. This was in the euro dollar. Now, here are some actual other signals that happened later on in December, as you can see here. in the British pound. We didn't get the 50-period simple moving average in here because of the chart, the spacing, but we're below the buy-sell line, the 50-period simple moving average. We close in the bottom 25%, as you can see. This is the highest bar of the last 5 bars. So this is a valid signal to go short. You would have entered short right here once we traded below and roughly 180 pips to the downside. 10 weeks later, you have another bar that closes in the bottom 25%. We're still below the buy-sell line, even though you can't see it. It's somewhere up here. But we're the highest high of the last 5 bars. So if we traded below, you would have gone short, which we did. And then it was 250 pips within the next week. So once again, all we're trying to do is be in sync with whatever currency pair we're looking at by using the buy-sell line. And we're listening to the market. The market gives us signals when it closes either at the top or bottom 25% and is the highest high or the lowest low of the last 5 bars, and then trades 1 pip either above or below, depending on what side we're on. So these are all the things you really need. There's nothing else you need to clutter your trading plan with. Here's a dollar Swiss franc example we had just about a month ago. We closed in the top 25%. The bar previously is the lowest low of the last 5 bars. So we entered for a quick 125 pips. And then here's a great trade we had on the 9th in the Australian dollar. Once again, here's the setup. We closed in the top 25%. We're above the buy-sell line. We are at the lowest low of the last 5 bars. And all this is verified with the software we have that gives you the green and red dots. But we traded above, so we entered, and it was 400 pips to the upside in the next 2 or 3 weeks. Not because we listened to any news, not because we were concerned with what was going on economically or what someone on TV said, but because we listened to the market. All right, so let's review. Remember, this is a pattern recognition strategy. All I've given you so far are setups to find the setup bar, the perfect environment, and then the entry rules. Okay? I can't give you everything because this is one of our best strategies for our Forex members at Specialist Trading, and I can't really give you everything because it wouldn't be fair to them. But I can show you how to enter into this trade. As you saw here, it's designed to trade quick momentum moves. Most of these trades I've showed you last anywhere from 5 to 10 bars. You can stay in them longer if you'd like, but it's up to you if you want to take a quick trade and get out or stay in there longer. Now, it works in any Forex market, in any direction. Here's one of the things I want to stress, though. If you're trading intraday, smaller time frames, well, you're going to have smaller gains. It's just the way it works. It's all relative because the moves are going to be smaller. You know, there may be anywhere from 15 pips to 75 pips. But at the same time, using our proprietary money management techniques, your losses will be smaller. But conversely, if you decide to use this setup and information that I taught you today on a larger time frame, such as a daily or weekly bar, where you're going to have much larger gains, as I showed you, like 400 pips roughly on that Australian dollar move, but you're having your risk increase a lot more. There's going to be larger losses when it doesn't work out. So you really have to be careful of that. That's why I advise everyone, I know your eyes may be lighting up, but paper trade this for a while so that you really understand the process. I don't want you to just jump in today and start, jumping in because you said, boy, it worked great in the presentation, because as I said earlier, it doesn't work all the time. In fact, since we're talking about losses, I want to show you a couple of examples here. Here's an older chart, 15-minute chart in the British pound, okay? We have a perfect buy setup right here. Even though we're kind of straddling, our close is above the buy-sell line. We're the lowest low of the last 5 bars, and we close in the top 25%. Plus, we have the green dot, so this is telling us that it's a valid signal, okay? So we want to buy once we trade above here on a 15-minute time frame, and it has to be in the next bar. So we entered. We entered at this point, and look what happened. Went straight down. Now, to the person who is not, sophisticated enough with money management skills or advanced trading, this would seem like a loss. But there are other things that we can teach you if you decide to become a member, or possibly in other webinars I'll teach you how this actual trade would have been a break-even trade. You would not have actually lost any money on this trade with advanced teaching techniques. Here's another example in Eurodollar, 5-minute chart. Now, I don't recommend trading on this small of a time frame, but a lot of our members like to trade smaller time frames. So here's a smaller chart on the 5-minute chart of the Eurodollar. We got a red dot to go short, so this is a valid signal. We're in the bottom 25%. We're below, we close below the buy-sell line, and we're the highest bar of the last 5 bars. So this is a valid setup to go short if we trade below in the next 5-minute bar. So look what happened. We traded below in the next 5-minute bar, and guess what? went down a little bit more, but not that much, and then went totally the opposite direction. Now, once again, on face value, someone would have said, well, this was a loss. This doesn't work all the time. It doesn't work all the time. But using our advanced money management techniques and advanced exiting techniques, you could have actually, trading conservatively, turned this into a gain. This could have been a profitable trade. I know it's hard to believe, but this was actually a quick profitable trade if you're trading conservatively. So there are many things to learn when you're trading. So it's not just enough to know the setup. That's why I want you to paper trade. I know a lot of you will be excited about what I've taught you today, but please paper trade for a couple of days, a week, a month. It doesn't matter, just as long as you understand this process. Here's what you need to know. When you're trading this technique, you need to know advanced stop placement. It's not just enough to enter and then just hope it's going to go your direction. So there needs to be advanced stop placement. Plus, you have to have numerous propriety exit points. It just can't be one exit point and say, well, I'll get out here, or what if it doesn't go there? What if you get out and it continues to go and you're just left a ton of money on the table? Now, on our classes, we teach you the best time frames to use as well as give you tips on how to increase your success rate. So what I want to show you here and invite you all is to become a member of Specialist Trading by buying this individual course. Now, for our special FX Street viewers today, we're discounting this by over 25%. Now, this Forex Swing Trader course, this Momentum course, usually usually costs $695, but we're discounting it to $495 for a limited time only. This is our Momentum Trader course. And what we've done here, this is called strategy number 4. Now, strategy number 4A just used to be for day trading. We've combined it with day trading as well as overnight trading. Now, should you decide to become a member, we give you instant course access, detailed instruction with 3 videos. I teach you all about entries as well as exits and advanced stops. Trade signal alerts come with that for NinjaTrader and for TradeStation users. We give you a PDF of the rules as well as personal email access to myself, so you can ask me questions whenever you like. So remember, for our FX Street viewers today, we're having a special discount. The course usually runs $695. We're dropping it down to $495 for a limited time only. Now, I wanted to give you that microsite information again. Remember, once again, this was the link that we wanted you to go to. Here is the same link, but we've cut it down so that you don't spend your time copying everything and feel that you've missed it. It's bit.ly/06mgvo. Now, that's going to take you to the microsite. If you have any questions regarding the purchasing of this, or if you have questions about specialist trading or anything on our pro trading strategy site, which sells our individual courses, this is the link you hit. And as I said, FX Street so graciously provided us with this microsite where it gives you more information. Okay, so simply click on that link. You can find out more about course description, find out more about myself, and it'll be very simple. Okay, now we're at the question and answer portion of the presentation. As I promised, please keep your questions to what we talked about today. Any questions about price or purchasing the strategy, simply go to the microsite. But anything concerned about what we talked about, I want to answer to make sure that you really understand this method. Now, let me go back. I see a couple of questions that were asked during the presentation. Milo asked, this method is for any time frame? Yes, it is. It works actually better in some time frames than it does in others, but once again, that's part of the course. So you can still use it. This is why I say paper trade, to see what time frame works best for you. Okay? So everyone comes in with different needs and wants. Some people like conservative trading. Some people like aggressive. So paper trade this in a multiple of different time frames to see which one is best for you. Colleen asked, 5-bar rule is back-tested statistics? No, these are not statistics, because a statistic would mean that this is a system. Remember, as I said, this is a strategy. Strategies are not systematic. They're basically rule-based, but they give you a little discretion. If you want to go back and use it 10 bars, the high side, that's fine. But 5 bars seems to be a nice number. That's what was taught to me roughly 30 years ago, and it's worked well over time. It stood up to the test of time, okay? I wouldn't pick anything less than 4 bars, okay? So I hope that answers your question. Misha asks, for long, if the next candle opens above the setup close, then starts to retrace a bit, do you want to wait for it to go 1 pip above again or straight in? That's a very good question. Basically, what they're asking is, let's say you have a setup bar, and then the next, if you're looking at daily bars, is the next bar gaps up to the upside. Do you just want to jump in? This is a very good question. This is where I would say you have to have some type of threshold. And we teach this in the class as well, but you have to have a threshold to know that if it's going to open higher than 20 pips, do you really want to be in? If it's going to be 20 pips or less, maybe it's okay to be in. So this is something that we teach you on how to decide whether you are going to take the trade or not. I personally have this strategy designed for momentum moves. It's called our momentum trader. So if it opens higher but then starts to sell off, that's telling me that the momentum is dissipating to the upside. So I really don't want to enter once it sells back. I would rather get in even if it gapped up a little bit higher, because the momentum may keep it going higher in that direction. So it's up to you. There's no statistics behind this, but we're looking to capture momentum. And if we're going long and it gaps higher but then starts to sell off, to me that's telling me that the momentum is already dissipated. Okay? I hope that answers your question. Joda asks, Steve, where do you place the stop loss? Well, once again, that's for our members. We teach this in the class, but we have a number of stop losses, proprietary stop losses, and how to actually track your trade, but that's for the members. I really can't give up that information. It wouldn't be fair to the members who purchased the course already. Okay. Same thing with the next question. Rob asked, what is your target? That's also part of our proprietary exit technique. You know, if I gave you that, then I would be giving you the whole, the stops as well as the exits. Then you'd have the whole course for free, and it's not fair to the people that paid for that. Okay. Steve, number one, is this strategy or are there any other confirming criteria that your paid subscribers incorporated to triggering the trade? And what is the success rate of this strategy? Okay, let me answer the first question. Are there any other confirming criteria that your paid subscribers incorporate to trigger the trade? Not really. I mean, you can, we give you different tips and techniques if you want to trade a little bit more conservatively, that you can get more confirmation off of that. But this really is the basic. What I taught you today is all you need to know to confirm your entry. There's really nothing else you need to know for an entry other than what I taught you. Now, once again, your second question has to deal with success rate. Now, success rate has to do with statistics. Statistics have to do with strategy. We do not backtest this because there are multiple ways in which to trade. I give you so many tips and techniques and so many different variables for trading conservatively, aggressively, for exiting early, for exiting late, that we'd have to be backtesting hundreds of different methods and techniques. So it's just, you know, we're not a systematic company. We're a strategy that has stood the test of time company, and that's what we teach. And this is what we teach is basically what I trade myself. Okay. One way to feel more comfortable is confirm this yourself through paper trading. See if this works for you. Many people paper trade for a week or two before they finally get to us and say, this is great, I want to purchase the course. Many people make paper trade on a week or two in a different time frame where it doesn't work as well, and it may not be their cup of tea. Well, that's great. You didn't waste any money or time. It was just something you were researching yourself. Okay. Steve, how is the 25% range determined? Okay. Is it 25% of the last swing? Okay, well, the 25% is, in other words, the range of the bar. If the bar is, let's say, 100 pips, well, we want to close in the top 25% would be from the top of that range to say 25 pips lower. Okay, that it's the top 25%. Okay, so it's if you're going long, what we're trying to catch is that the cross currency is giving us a clue that it's headed in that direction. And the clue is, if it closes in the top 25% of that range of that particular bar, then most likely it's going to continue in that range, in that direction. If it closed anywhere from the middle lower, it's most likely not going to continue higher. It's run out of gas. It's giving you a clue that there's no real momentum in that direction. But if we close in the top 25% of that setup bar, the clue is that it's most likely going to continue going. The only reason that bar ended was because we defined where the close was. We said it closes at the end of the day or it closes at the end of 15 minutes. But the cross currency can continue going in that direction as long as it wants. Okay? So I hope that answers your question. So it's not the 25% is of the setup bar. It's of that one bar. Okay? Steve, do you use any crossover moving average using this method? That's a good question, Len, but no, I don't. I know some of our students like to use other moving averages included with 50 period simple, but I really just stick with things, once again, keeping things as simple as possible, and I just stick with the 50 period simple moving average. I know a lot of other traders will say, well, Steve, it works well for me when price is above, but also the 20 period simple moving average is above. Well, okay, well, if that works for you, that's fine. I really don't use that, though, in my personal trading. Okay, so I hope that answers your question. Next one, Rob's asking, can you discuss the specifics between the Forex and stock courses, or in the example of the demonstrated strategy? Rob, I don't want to really go into it because I'd rather, teach. I know that this strategy works well in stocks as well, but I think the best thing would be to talk to my associate or send him an email. That's Brett. He's the Vice President of Research at Specialist Trading, Brett M at Specialist Trading, or you can contact him directly, and he can really go over the details and show you some examples and show you recent trades, both stocks as opposed to currency pairs. Because I don't want to start, comparing courses and getting into specifics. I'd rather really just teach what I had here today. But all I can tell you is that this strategy works well trading the E-minis as well as daily bars in stocks. In fact, it works tremendously in daily bars in stocks and in trading any time frame in the currency pair. Okay, and I personally use this myself. Okay. Let's see. Steve, what indicator do you use showing you those red and green dots? A custom one? Yep, this is for the members. If you decide to become a member, we furnish you for TradeStation and NinjaTrader these signals. Okay, so they automatically appear on your chart. What is the cost of the indicator? Once again, don't want to sell. It all comes with the price package. You can contact Brett for maybe some type of discount we have for the indicator alone. Okay, but Brett, once again, our VP of Research handles all that information. You can send him an email. If you don't want to talk to him personally, you can call him at this number. And then lastly, Manoj says, Steve, we hear lots of strategies on FX Street. Do the banks use similar strategies but with bigger lots, or do they use a different mindset they're never privy to? Yes, actually, the banks do use strategies. They use strategies, but they use strategies also incorporated with fundamental use because they're involved fundamentally. But just to say that doesn't mean that they're not using techniques just like this. And this is a technique, once again, that I did not come up with on my own. This has stood the test of time for ages. I mean, traders were using this in the early 1900s. So this is not something that is that we just designed. It's just a common technique that gives you clues as to what a market is doing, whether it's a stock market, cross currencies, or the E-mini, it doesn't matter, futures. So it works really well in all of these markets. But yes, to answer your question, the banks do use strategies like this. They use a multitude of different types of strategies. Okay. Michael asks, does the last 5 bars include the setup bar? Very good question. Yes, either the setup bar or the bar before it. So in other words, if you're going long, ask yourself, is this setup bar the lowest low of the last 5 bars, including that? And if it's not, well then, is the previous bar the lowest low? Okay. So that's how you would do it. Let's say you're going short and you find the setup bar. You ask yourself, is this setup bar, which I just found, the highest high of the last 5 bars? So we're including that. If it is not, then ask yourself, well, is the bar before it? Okay, that's the only other exception you have. Is if the bar is before it, the highest high of the last 5 bars, then it's valid. Okay, I hope that answers your question. Boyke asks, what is the cost to receive the signals? Once again, I don't want to really go into cost negotiation. We have specials, Boyke, that we can, discounts that we have for previous members and also for people that are FX Street attendees, especially today for the short term for the next couple of days. So I would contact Brett. He can fill you in with all of that information. Michael asks, is this as successful as strategy number 5? I believe it's right up there. It's a very good question. For many of you who are purchasers of our strategy number 5, by the way, we are long the British pound yesterday. So we have a really nice trade in the British pound using strategy number 5. For all of you members out there, I'm sure you're all very happy about that. But this is kind of a different type of strategy. You're going to get more signals with this. Okay? So that means a little bit more risk. And you'll have your decision process, whether you want to trade aggressively or conservatively. So it's kind of a different, where the strategy number 5 is more cut and dry. So they're both successful, but kind of apples and oranges, okay? And they're not based on the same pattern. They're totally different strategies altogether. But I would say in its own category, yes, it is just as successful. And the good thing about strategy number 4 is that, once again, it transfers over into all markets, where strategy number 5 really doesn't transfer in stocks or E-mini as well. But strategy number 4, you can use it trading stocks as well as the E-mini, as well as cross currency. Okay. Now here's one thing before we go, because we're almost out of time. One thing I want to show you. You just got all the rules. I've taught you all the information on how to spot a setup bar, and then once you found the setup bar, on how to enter. So I want you to go to the top currency pairs and see if you can spot one right now. I mean, we're not going to have a test on this, so don't worry, just for your own information. But there were, before I signed on today, there were two specific currency pairs that were actually given as signals, one to go long and one to go short, using the same rules and the same techniques and the same method that I taught you today. All right? I don't want to tell you what they are, but the one to go long, which it may have changed, but the one to go long rhymes with euro dollar, and the one to go short rhymes with Swiss franc. So you may want to check those out just to see if they're still valid signals. They may have changed. They may not be in the bottom or top 25% anymore. But just go and look at those on a daily time frame, on a daily bar, okay? Boyke asks, once again, which time frames are best? There are a number of time frames. I would once again speak to Brett, because then we start getting into, the actual course, and that's something we reserve for our members to tell you what time frames work best. A slightly nonsensical rhetorical question: why 5 bars and not 4 or 6 bars or any other number? That's okay. This was asked before. 5 bars have stood the test of time. They're not back tested. They're not researched. But just 4 bars seems to be a little bit not enough, too short, and 6 bars you're going to miss a lot of trades by having to make sure it's qualified for that. 5 bars just really seems to really fit in well. Okay. I hope that answers all your questions. Remember, once again, to visit the microsite that FX Suite has provided for us. I gave you the link so you can go there and get much more information about all our strategies, ask about prices, and contact us here, Brett M. at specialisttrading.com, or call him directly at 310-844-7220. Thank you so much. Have a great day. I'll see you next time. Bye-bye.